what is a CIB, what is an IAB, and how are they different? All the best. So I think I can take the start of it. A CIB is a capital index bond. So if you put down $100, the $100 grows at the inflation. These are all inflation-linked bonds. So the $100 grows at inflation. At the maturity, it's whatever the compounding inflation is, the issuer owes you that money. And the IAB is an indexed annuity bond. And so what that is the cash flow. The money you're getting is indexed to inflation. And so if you think of one as having a great big pie at the end, the indexed annuity will have nothing at the end, but you'll have received higher cash flow through the life of the bond. And so what we find is at FIG, what we find is a lot of clients put those two together, buy both.
Yeah.
So they have higher cash flows and then a big nest of money to go at the end, and then they recalibrate again. Do you do much in these?
Yeah, so I think what's good about this question is it brings to the table the fact that clients have to have a combination of defensive assets, don't they? And it comes back to what's the client after. Are they after a higher income or a lower income? Do they want capital in the return of their income payments or not? So I think for us what it's about is what's our client trying to achieve, and then putting together and constructing the portfolio and using companies like FIG to work out that combination, which is a specialist field, I think, even beyond a lot of planners. It's
amazing how many issues there are in these assets. There's the Australian National University, AA- credit, and they issue these things out to 2030, and there's a whole range of them. And I think the key to it is similar to your business in that there's small issues. So it's very hard for big organisations to take a chunk. In the same way your business would say, I can only put 15% of my money into an asset. You can't buy an asset that's only worth $2 million because it's too small as well, and that's where these things, suit your customers. There's small issues. Preco has I think it's about $40 million issue, so it's perfect. Big funds can't buy it, and you get some great returns once you can find them.